Hello everyone, welcome to my channel. Today is 10th of April and we'll look into some of the daily setups. So first example is SAIL, Steel Authority of India, and we are in the daily chart of around 6 months of data. So we see from here actually 13th of December where share started going into downtrend, but from this point of time around 15th of December onwards it started following this lower top channel. So here it made a lower top and then here it tried to make 4-5 times lower top, and then if you draw a trend line, the trend line goes like this, which is already drawn, and then you see we have one incident of touching the top. Then there are 3-4 times it tried to touch the top, not able to break it and came down. Then there's another time around February 10th of February it tried again and could not break it. And then we see here in I think March 11th March and 12th March it again tried to touch the trend line and came down. So like more than 7-8 times it tried to touch a trend and came down from the trend. And this is the first time here on 23 March it broken the trend line and again came down towards the trend line. So near to the trend line it becomes our buying point. So somewhere around here 97, 98, 99, this is our buying range, and 3 to 4% of stop loss. So roughly around 94, 95 rupees becomes your stop loss. So this is where you take the entry and then you let the trade go on in your direction. And you see once this reversal happened, once it just broke a trend line for a day and then it started moving up, so then it moved up with a very good price action. So suddenly moves 2-3%, then another 4-5% movement, and it moved till 110 where it's taking some resistance. So if you saw it here somewhere here, it's around 99 rupees, it becomes our entry point. 95 becomes your stop loss and you trade up, and when it goes like 110 plus, then you move your stop loss to 105. Okay, we'll take another example of Colgate Palmolive. Here we saw it's on the trading band, where between the upper trend and the lower trend, where it's not making lower lows, it's just staying in the band. And then here we saw from here from November 24 till March 10th, so roughly around 4-5 month time it was in this trading band, and then this point of time it have broken the trading band. And if you see here this candle 7th of March when it touched the lower end of the trend band, and from here it just made 3 candle very quickly. So almost from 1390 to 1485, almost a 7-8% movement in just 3 days, and then it's hardly broken this upper trend line. So now if whenever you come go to trade and this kind of setup, there are multiple way to trade this setup. First is we try to buy the lower band. So like let's say here it made a lower band, so this point of time around 1394 you buy, and then you keep 2 to 3% your stop loss. So if you buy at 1390, maybe 1350 is your stop loss, 3%, 40 point. And then you generally trade it for upper side of the target, or at least a 50% retracement of the range or the band. So from here the target should be ideally 1480. So you 40 point your stop loss and then nearly 100 point your target. And other time if you saw if you are option trader, this point of time you can just buy any near buy call option, which is 40-50 point, and then keep some 20% stop loss in the option. And then you see from here the movement happen, and definitely your option would have gone at least for 50% up. Here again another time here 24th of February it made a low of 1392, and then in 2-3 days it went to 1450. So if 1392, if you bought 1430 or 1450 option, that option must have gone by at least 50 or 60%, or it might have gone double from between, because this movement took place in just 2-3 days. So that's how option trader trade this set. I'm not suggesting you to trade option because there's a lot of risk involved, and there are other parameters that have to be analyzed when you enter into option. But a delivery trader can easily buy here or can easily buy here, and once it's above this trend, above this upper band of the trend, then your entry point is near to trend line. So if you are here, your 1485, you try to enter around 1485, 1490, and then 3% from there, so roughly 1450 becomes your stop loss, and then you trade for upside at least 7 to 8%. Okay, let's take another example. Sun Pharma. This time it's in the trending range, but on the upside it's making higher top and higher bottom. So if you have saw this trend here, this is the time you can enter, or this is the time you can enter where it tested the trend few times, 4-5 times, broken for 1 or 2 days, but recovered quickly. And then so this somewhere around here, if you look here, somewhere around 807 becomes your entry point. Below 800 or at least 790 becomes your stop loss, and then you look for at least 7 to 8% target. So from this point you at least look 7-8%, so something around 850 or 860 becomes your stop target, which has already been achieved. So this is how you trade. Yeah, still the direction looks up, though it's facing resistance here, but if it comes something around 880, 885, so it becomes your entry point, and then one can expect a higher target like 950 rupees or even higher, maybe 1000 rupees in a 6-month time. Another one, GAIL, Gas Authority of India. If you look into 9-month data, there's a top here, another top here, there's a third top here, and there's a fourth top here, and it's trying to hit this particular top again, and there's lot of candles which are made near to top. So there are chances that okay, I cannot say there are chances, it can go in any direction, but there are higher chances that trade may go in upside. So once it start, so how you trade here, once you start trading above this trend line, so let's say once it close above 165, then somewhere around 160 becomes your stop loss, and then you look for a target of 8 to 10%. So from there something around 180 can be a target. If you are short side trader, then you keep 165 or 168 as your stop loss, and then you look for a target of again 155 and 140 rupees. So that's how you look into short side. Okay, couple of new form trend. You see this trend line in Asian Paint, almost out of this 20-25 session, almost 10 times it might have hit this particular trend line. So near to trend line is your buy, maybe 1% is your stop loss, and then you can look for a target of 4-5% and exit. Again, this is commonly used by the option trader. You buy near to the trend line, 20% is stop loss, and then once you see 40-50% gain on your option, you exit. Same way, another example, Ashok Leland, continuously following the trend. 1, 2, 3, 4, 5, 6, last 7 is candles are just touching the trend. So again, you just buy on the trend line, 1% is stop loss, and 3 to 5% is your target. Another one, Dr. Reddy. Okay, two things to look into Dr. Reddy. Here we see it made a double top, and then inside double top it made once a triple top. So generally it's a bearish pattern, and then this is a place it was trying to hit the top few times and could not. So even if here somewhere it becomes a short sale, so somewhere around 4,900 this was a short sale with 3% stop loss, so something around 5,100 is your stop loss, and then from this point it's continuously came down, and all the way came down till almost 3,600. Okay, now it's at this point here it's making a more of a bullish pattern. Okay, so this is your trend line, and almost 1, 2, 3, 4, 5, 6, 7, 8. So almost in last 2 weeks, almost 8 to 10 times it hits the trend line and going up. So let's say if it comes down near to again trend line, which is around 4,300. So around 4,300 is your entry point, and maybe 1.5% stop loss. So just 50 point stop loss, and then you again look for a target of at least 4,500. So percent of stop loss and 4 to 5% of the target. So that's how you trade this setup. I think that's all from my side for today. Thank you guys.